In this video, I'm going to show you exactly what is happening right here in the Brantford real estate market right now in May 2024. This is the most interesting and most important market update so far this year because the market is changing right under our feet from the calm winter market that starts the year to the very busy active spring market which is underway right now. Conditions are very different than they were just a few months ago, and this can have a major impact on your decision to purchase or sell a home and exactly how to win when you're doing that. Now, this video is going to be extremely valuable if you are considering a transaction in the next 1 to 3 months. But this video is also very useful if you're just trying to understand what's going on in the market. You're a homeowner here in Brantford, or you're considering relocating here to Brantford, and you want to get beyond those clickbait news headlines and into the real statistics. Understanding what's going on in the market is the most important and critical step to making a winning plan to get you from where you are to where you want to be with your real estate goals. If you are ready to get started, I want you to hit pause right now and go ahead and reach out to me directly. All of my contact information is in the video description below. You can email me, call me, or text me, and we'll take the information from this video and apply it directly to your situation and create you a winning plan. Okay, let's get right into the details because I know you're just as interested as I am. So the median sale price for homes in Brantford came in last month at $640,000. Now that's up 7.5% from the month before, which is a big 1 month increase, but it is down 1.5% from the year before. What I find most interesting about this chart is actually when I run the current sale point, this white dotted line backwards into the historical sale prices, we see that right now the sale price is actually very similar to where it was last summer and also in the summer of 22 and basically for the whole year of 2021. It's like the housing market likes being at this price point, even though the conditions were very different in all of those different time periods. Now, the market has been extremely volatile, as you can see, over the last couple of years, with the pandemic market combined with low interest rates causing that rapid rise in home prices, and then the opposite effect when the Bank of Canada started rapidly raising interest rates, bringing those prices right back down. And you can almost see on the right side of this chart how the market is bouncing around trying to find its new level. Now, if we look to the right side of this chart, you can see that last spring, the pricing started to ramp back up, which is normal in a spring market, especially when we have these considerable supply and demand imbalance that still exists in our market. But then what happened last summer is the Bank of Canada came in with its 2 summer rate decisions, raising rates again 2 more times, the last 2 times so far. And that actually had a cooling effect, you can see, bringing the market back down in the fall and winter. And now we see that exact same pattern repeating, where since the winter months, the price has been slowly climbing up month after month back to the place we are right now. How this plays out for the rest of the year, well, we're going to dig into that for the rest of the video. When I look at the pricing year over year, this chart shows the median sale price for the whole year in all the previous years and year to date so far this year. And so for the whole year, we're at $616,000 as the median sale price, and that's only down 3% from last year. It's not going to take that much more movement, maybe 1 or 2 more months before we find ourselves back up beyond 2023 pricing. We are down 10.4% from the peak pricing of 2022, but that actually isn't a big number either when you consider that that market was driven by wild bidding wars and low interest rates, and right now we're in a much more balanced market with high interest rates. We only have 10% more to climb to go back to where we just were at that previous peak. Now, there's different house styles available in Brantford. We are primarily a single-family detached community, but townhomes and apartment-style condos are becoming more and more common as people look for ways to get into the housing market at a lower price point. So the average detached home last month was $672,500, but you could get into a townhome for $612,415 is the median number there. And you can see that's almost a 10% discount. You're able to get into a townhome if you're willing to kind of share a wall with some neighbors, have a little narrower yard. There are some options to get into the housing market. You're generally getting just as much square footage in these homes. You still have a private yard, you still have a garage. It really is just a narrower lot, and you don't necessarily have access to your side yards. So this can be a great option, and we're going to see more townhome style housing coming to the Brantford market with all the new developments coming online. The other product is really the apartment condo lifestyle, which used to be pretty rare in Brantford. It was a very niche product, but as we see new and new developments come online, more and more of them are pushing towards vertical living. And this is going to be really the future of the entry-level product here in Brantford. And you can see right now that if you are a first-time home buyer struggling with today's interest rates, this is definitely a product that could work for you when you see that the average or the median entry point of 408 compared to getting a detached house at 672. Now, very important, the Canadian Mortgage and Housing Corporation came out with their Canadian housing market outlook the last couple weeks, and I gave this document a thorough read because I really appreciate when they put out this research. They're coming from a neutral position. You know, they're not a real estate agent, they're not a big bank or a lender. They really are mandated to help with housing affordability. So their research really comes from an unbiased, neutral position where they want to try to forecast what the next couple of years would look like in terms of housing starts, which is new home construction, the average rent, and the median sale price. So kind of understanding how the housing market is going to look for everybody. And there's kind of some shocking data in here. Based on their report, which I can send you a full PDF copy if you drop me a comment here, their projections are that by the end of this year, we should see an increase Canada-wide of between 3.6% and 6.5% on the average sale price of a Canadian home. Then if we project that out one more year to 2025, we could see an aggregate increase of 11.4 to 18.4% over those 2 years, and go one more year further, and we could see an increase from 14.5 to upwards of 23.6% increase in home prices in the next 3 years. Now remember, these are the predictions coming from the Canadian Housing and Mortgage Corporation. They don't have any skin in the game to nudge this or want to influence it. They're just reporting what they see. They cite the main drivers of this housing increase are that, number one, because of the high interest rates and the post-pandemic years, housing starts have slowed down incredibly. We've seen this in our community here in Brantford, where the number of new homes being built over the last couple of years has completely slowed down, right? And so those new developments, whether they're condo towers or detached homes, they take a couple of years to come back online. So all this talk about building new homes really is not going to affect the market for the next couple of years. We still have a huge imbalance of supply and demand. So that's on the one side. On the other side, they cite improving economic conditions. And that is overall in our economy, but also knowing that the cost of lending is going to come down, making borrowing and affordability better for those of us struggling to qualify for a mortgage today. So we combine with an increase in demand, better economic conditions, but a lack of new housing supply coming online, and those two things are butting heads against each other, bringing prices up over the next couple of years. Now, in the report, they specifically dive into some of the major centers, and our closest neighbors in this report would be the Kitchener-Waterloo-Cambridge area and also the Hamilton area. And if I pull up this specific chart, you can see that they're showing where the prices were 2021, 2022, and 2023 on the left side of the chart where I have it circled. And they're showing that if we go from, say, in Kitchener-Waterloo, the average home being 790 grand in 2023, they're projecting that it could be anywhere from 830 to 890 this year, 850 to 950 in 2025, and 890 to $1,050,000 in 2026. And when they say L and H you see on these charts, these are their low and high predictions. They're putting in different economic models, whether it's pessimistic or optimistic, on these different variables. But you can see that none of these ranges have home prices coming down. That's the big indicator. So if you've been waiting for home prices to come down, this is your time. All of this research says that this is as low as they're going to get, and we should expect home prices to go up from here. Now, I took this data and I applied it mathematically to the average sale price of homes right here in Brantford. And you can see back at the peak pricing was 2022, where we hit 688 for the median price of homes, and that actually slid back down last year. Well, now applying that same mathematics to the CMHC research here for Brantford, we see that in 2024, the prediction has the price going up anywhere between 658 and 676. So that brings us almost back to the peak level pricing. And then you see in 2025, it exceeds that by hitting 707 to 752. And then again into 2026, climbing even further, 727 to 785. This is quite shocking because the report predicts that the average home in Brantford could be $100,000 more by 2025 and potentially almost $150,000 more by 2026. Okay, let's get back into the stats right now for Brantford instead of all this predictive stuff. Let's keep talking about what's really going on right now in May. This chart tracks the strength of the offers. Basically, the listing to sale ratio is the percentage of the sold price as a reflection of the asking price. And as we see, you can see these peak years where the market was crazy. We were talking about 15% over asking, 30% over asking as an average offer. And you can see where it slid back down under the white line that I have there is 100% a full price offer. But we can see in April, the average accepted offer, the sold price of a home was 99.2% of the asking price. Now to break that down even further, I use this chart where every red dot represents an actual sold property in April. And what we have here is the white line representing the 100% again. And what you can see on the vertical axis is the offer strength, and on the horizontal axis is the actual sale price of the home. The most interesting things that I see in this data is that 45% of all the sales that happened last month were at full price or higher. That is not a slow market. That's actually in a very aggressive market when you consider almost half of the properties were getting exactly asking price or going into multiple bids and going up over the asking price. And even if we look below the 55% that were under asking, you can see that they're very tight towards that full price line. There's actually very few dots anywhere below 95%. So this idea, if you're a buyer out there, that you're going to go get a significant discount off the listing price, we should probably wipe that idea out of your head, right? On the other side of things, if you are a seller, the takeaway from this chart is that if you overpriced your home by just 5%, you could find yourself completely out of the market being ignored by buyers. Even when the market is hot, getting the right price is very important. Actually, there's a lot less risk that if you slightly underpriced your home, you actually have a chance of potentially getting multiple bidders and bidding it up back over the asking price. Much better strategy in this market. Now, the time to sell a home has taken a dramatic fall, and that means homes are selling faster and faster every month so far this year. Last month, the average time to sell a home came in at only 12 days across all the homes that sold, including times to fulfill conditions like home inspecting and financing. That's a 20% drop, 20% faster than the previous month and 14% faster than last year. And the takeaway here is that the homes that are fresh on the market are the ones that are getting most of the attention, while homes that have kind of missed that mark, they tend to just stay on the market and everyone sort of ignores them. In fact, I have that data in another chart here. Again, the red dots here are showing the sale price across the bottom, but now the time on market up the vertical axis. And you can see how most of the sales are crammed in along the bottom of this chart. In fact, 70% of all the homes that sold were only on the market for 30 days or less. In addition to that, 50% of the homes that sold were only 15 days or less, including all conditional period and the entire time on market. That is a very fast-moving market. For buyers, it's very important to understand this and realize that if you are looking at these fresh new listings, you have to be acting quickly. Don't be thinking this home is going to still be around 2 weeks from now to go check it out at an open house. If you see a home you like, you got to go out and see it, and you got to make a decision if you're going to put an offer in or not, and potentially be prepared, if it's priced well, to be in competition with other buyers. And on the flip side, as a seller, this is really important, and I'm going to come back to this a few times in this video, that as you're coming to market in conditions like this, it's more important than ever to have a strategy and plan to do it right the first time. Because all the fresh new listings are getting all the action, and the longer you are on market, you see there's just fewer red dots. There's just not that many sales happening in the top half of this chart compared to crammed down there below. Having your home sell quickly and having it sell for the best price are normally the exact same thing. So you want to get it right the first time. Now, overall demand for properties was up significantly in April. 154 homes sold, that's up 24% from the month before, which is totally normal for a spring market. We expect this type of bump in demand heading into April and May. We are down just a little bit, 2.5% from where the demand was last year. Year to date, we're also behind just a little bit, with 448 homes total sold so far this year compared to 468 last year. But you can see the big dramatic difference in those peak years of 2021 and 2022 And remembering in those years, we had abnormal starts to the year where the demand just came out like a rocket ship right in January. It didn't wait till the spring. So those were different strange years where the interest rates were almost zero and everybody was just going as quick as they could to buy a home early in the year. We're seeing much more typical year this year where January, February, March was a bit slower coming out of the winter, and we really saw the market start to pick up in April, and we expect that to continue on through May and June. On the supply side, there were 273 homes that were listed for sale in April. That's up 33% from the month before. Again, typical in the spring market, but what's kind of wild is it's up 32% from last year. And you have to squint and zoom in here to see this on the chart, but what I can tell you is that last year, the rush of new listings didn't really hit the market until May. April last year was kind of acting like a winter month, where this year, April was acting like the unofficial start of the spring market. So who's to say, was April this year early or was May last year late? But either way, there's a little discrepancy on which month the rush of new listings started. And it does really look like the market got kicked off last month with all these new listings coming online. You can see that here again in the year-to-date data, where we're almost 100 more listings on the market year-to-date this year than last year, and that's mostly represented by that extra boost of listings we got in April this year that didn't really start till May last year. But you can also see that we are down significantly from those peak years. So if the market was slowing down and we were expecting prices to fall off, we would expect these blue bars to be much higher. In fact, there is not enough new listing activity to satisfy the number of buyers that are entering our market. Now, speaking of that, the inventory level is actually the total number of homes for sale in any given month. And that was up to its new peak for this year of 307, which is normal. We expect inventory to build through the spring. And basically what's happening is there's just slightly more homes coming up for sale than there are selling every month. So that's causing inventory to build. This actually provides a little bit of relief for home buyers because it does look like you have some more choice out there. For sellers, it means you've got a little more competition in terms of evaluating where you sit when you bring your home to market against your competitive neighboring homes for sale. But there is really a story of two different markets happening, which I'm going to show you in just a minute. So this chart with the blue dots actually signifies every home that is on the market at the time of making this video. The asking price along the bottom axis and the time it's been on the market. And the difference, if you remember back to the other chart, which I'll combine these two in just a second, but we see that there's tons of blue dots all the way up the chart, meaning there's lots of homes that have been on the market for a very long time without getting an offer, versus the majority of the active market happening on the hot new listings. So when I combine these two data points together to see the whole market, what I want you to notice is every red dot is a sale, every blue dot is a home for sale. So it's the areas where you see a lot of blue dots but no red dots. I'm going to call them no man's land, right? You basically have this bar of anything kind of 30, 45, 60 days on market. There's this chunk there where you see a lot of blue dots, not so many red dots. And then when we start looking up above, like you see where it's like 100 to 500 days on market. I mean, 500 days is like a year and a half, right? So we have all these blue dots out there in no man's land, really just kind of padding the inventory numbers. Like they're not selling, nobody's interested in them, but they still have a for sale sign on the yard. So we really want to think differently when we're going into the market, that we've got these two different markets happening. We've got the fresh, new, fast moving market, and then you've kind of got this old, stale side of the market where there could be deals to head, or you've just got sellers that are stubborn and are leaving their home on the market and not really willing to adjust their price. So it's really important to understand what's going on as you're out shopping. And again, you want to make sure that you're down at the bottom of this chart as a seller. You want to be one of these red dots that gets it done in just a couple weeks. Nobody wants actually to have their home up for sale for 3, 6, 9 months. It's very, emotional process to, especially if you're living in the home, to have it on the market that long. Okay, the month's supply of homes is the single easiest indicator to track to tell you kind of the temperature of the market. Is it a buyer's market or is it a seller's market? So this is a mathematical division between the total number of homes that are for sale divided by the number of homes that sold in the last month. You can think of it as like a turnover rate if you've been in manufacturing or warehousing. So the lower the number means that the market's moving very quickly, there's not many homes for sale, and the buyers are out there buying them up. When the number is higher, that means that there's actually lots of homes for sale and not as many buyers, so there's going to be leftover homes each month, and the best priced homes are going to be the ones that sell. And you can see here back in the pandemic years, this number was flatlining. Like, to have a month supply of sub 1 is crazy. We had never seen that before. And since then, it's been steadily climbing with a bit of seasonality in there. And we have seen it increasing throughout the year so far, which is normal as more inventory is coming online than buyers are buying it up. So it's causing the month supply to rise too. But what we want to understand is that even though it's rising, a number right now it's sitting at 2.9. Let's say we even round it up to 3. That's right on the edge still between a seller's market and a balanced market. So it's still actually a pretty fast moving hot market comparatively. It's just that we were so used to a really crazy bananas market of the pandemic, it kind of reset our expectations, right? The important thing here too is to look at it broken down by price point. And because we do have a variety of price points available here in Brantford, really important to break that apart. And you can see that the lower priced homes, here I have in the white line, 600,000 or less, the red line is 600 to 800,000. You can see that they're actually hovering around that 2 level, which is a hot seller's market. One notch up with the blue line, we're talking about 800 to a million, coming in around 3. But you see the dramatic difference when we jump up above that $1 million price point. Here we're sitting at about a 9-month supply. So you can imagine if you're a buyer coming into town looking at $1 million, $1.2 million, you can go and shop and look at 9 or 10 homes and pick the one you like, right? Versus if you're down here shopping at $600,000, there might only be 1 or 2 homes to look at this weekend, and they both probably will be sold by next week. So very different markets when you're coming at it as a buyer, but also as a seller, you need to understand what type of market you're in so you can do the work needed to make sure that you're going to win. So important if you're bringing a $1 million plus home to market right now, that you do everything possible to prepare the home, market it properly, and make it stand out from the competition so you're the one that gets sold while your 8 neighbors are waiting next month for their chance at an offer. Interest rates are on the top of everyone's mind, right? It is going to be the biggest lever that once they change, you're really going to see some energy injected into the market. There are 2 announcements scheduled for this summer, one coming up at the beginning of June and the other coming in the end of July, right? And last year, remember that at these 2 summer meetings, both of them rates were increased, and that really cooled off the market for the rest of the year. Well, the predictions for this summer is that we're either going to see rates stay the same or drop. Nobody that I'm talking to at all in the market is predicting rates go up any further. And in fact, the Bank of Canada governor, he even has come out and said on video that rates will be coming down. It's just a matter of when. They can't promise what date, but they do admit that they feel like rates are too high and they're doing the job necessary to bring inflation back down. They just want to make sure that it's for good before they change direction. They don't like to be seen to go back and forth, back and forth. Basically, once they start going down, that will be the path. It'll be down or hold, down or hold, until they get back down to a, they call it a neutral rate territory. So expect that at one or potentially both of these meetings, we could see rates reduce, and definitely rates will be down before the end of the year. And whenever that starts to happen, what that's going to do is inject a lot of consumer confidence in people. It'll cause them to hop off the sidelines and get back in the housing market. In fact, there was another study I was reading this week put on by Ipsos Research, based on, they were funded by the Bank of Montreal, but they were calling out to potential home buyers, and 62% of people who said they wanted to get into the housing market also said that they were waiting for rates to come down. So you can imagine what's going to happen when rates start to come down and all those people jump off the sidelines when there really isn't any new supply for them to buy. Inevitably, we're going to see prices rise right back up. And I actually try to illustrate that in this chart here. What I've done is correlate the median sale price in Brantford in the red line with the Bank of Canada overnight rate. And you can see when the rates were slammed down to almost near zero in the middle of the chart there, that red line took off and went up. And as soon as they reversed course and started raising the rates, you can see it pull the red line back down. And then here on the right side of the chart, where rates have been basically unchanged, you see the market trying to find its new level. And it is even, you can almost see it trying to push the price back up. The market wants the prices to go higher, but the interest rate and the borrowing environment has been very restrictive and tough for a lot of people. So you can see exactly, it's not hard to predict what's going to happen when rates go back down. You're going to see that red line start to head back up. This is my absolute favorite chart as a researcher. I'm actually showing 3 different data points on one chart. Across the bottom, the left to right, we have the asking price. Heading up and down, we have the selling price, and the size of the dot is actually indicative of how long the house was on the market. Big dots were on the market a long time, tiny little dots sold very quickly. And this chart shows me a lot when I compare it month over month. The big thing I'm seeing here is how clustered it all is along the full price line. We're not seeing a lot of huge discounts happening, and just how many more tiny dots there are than big dots. It's also interesting to see, there are very few sales underneath $400,000. That part of the price point in Brantford is almost non-existent. And then we do see some more high-end sales finally starting to happen. The high-end market was very quiet for the beginning of the year. Now I want to show you the one interesting thing I'm seeing here. We got to zoom in on the chart. And when I zoom in, this is the same data, just we're looking at it a little tighter. What I want you to notice is these vertical lines of dots showing up. I call this the 99 strategy. We see this happening whenever the market is getting a lot hotter, and definitely at the lower price points, the market is very hot. So these vertical lines represent everybody. They were priced at the same price, but they sold all at different prices. You can almost see vertically the bidding wars happening, right? When you look at $299, $399, $499, $599, $699, and even there's a little line in there at $649. But what you don't see is this happening any higher. So this is the type of data we use when I sit with you as a home seller to decide what our pricing strategy is going to be. Because I mean, if you're trying to sell a $900,000 house and expecting a bidding war right now, it's not that likely. But if you're down here at $499, it looks like it's almost inevitable. And you can also see the expectations of just how big those over asking offers have been. So as a buyer, make sure you're watching out. If you're seeing homes priced at these $399, $499, $599, it's a safe bet to assume the seller is expecting it to go over asking. They're probably not going to be that excited if you offer them under asking. And then in between these price points, you may expect that the home is more reasonably priced, somewhere where the seller expects you to actually make them an offer. All this data is really important to understand and to use to formulate your strategy, whether you're a buyer or seller. One more chart, and this chart I use in my sales trainings all the time, and I actually show it to my clients when I sit down to work with them about selling their home. This chart combines the time on market, left to right, and the offer price on the vertical axis. And what you can see is a very clear pattern here, that all the big multiple offer bidding wars, they're basically happening in 15 days or less on the market. So those first 2 weeks when you're on the market is your best and almost your only chance if you're going to get a wild bidding war and sell your home for more than it's worth. It also is where the majority of all the dots are condensed, but you can see a clear pattern as we move to the right of this chart that the longer your home's on market, the worse the people make offers. They want to negotiate against you now. They want a discount, and there's just fewer and fewer red dots. This is why it's so important when I sit with people to talk about a bring it to market strategy, that we get everything right the first time in terms of preparing the home for market, getting it ready for showings, doing an awesome media shoot, and doing a big marketing launch, and even timing what day of the week or which week of the month we put the home on the market. It's all done with intention and purpose so that we get it right the first time, and you're one of these red dots, not one of those blue dots we saw before floating around. Okay, that was a whole lot of information, and I tried to bring it to you nice and quick and concise. But if you want any more detail on any one of these charts, or you're wondering, what does that really mean for me? That's what I'm here for. I'm a real person. Don't be scared to reach out. Call, email, text, leave a comment here on the YouTube video, and I will get back to you with some custom research. It's what I like to do. A little bit of advice. You made it this far, so I want to give you some custom advice. Number one, buyers, right? I know people are telling you this, but I'm telling you, if you can get into the market, now is the time. For that might mean, compromising a little bit, maybe buying something that needs a little fixer-upper, maybe going down and being a little less picky. But as you can see from everything in this research, from me, from Canadian Mortgage and Housing, from the Bank of Canada's interest rates, prices will be going up. Waiting for interest rates to come down will generally mean you're going to be buying the home at a higher price. Your monthly payment is still going to be the same, but the price of the home was higher. So why not get into the market now and ride that appreciation up if you can, right? Might require some creative financing solutions, might require you getting a cosigner or buying a home with a friend, but it doesn't look like homes in the future are going to be any more affordable than they are right now. So get in the market. Also, this applies if you're considering moving up. If you're ready to move up from your current home into a bigger, more expensive home, the window is open right now for that too. In fact, as you saw from that month supply chart, you have the possibility to sell a home in a hot market and then buy a home in a buyer's market if you're moving up to that million plus price point. So it could be a really smart move before the energy comes back to that $1 million price point, which again will happen as interest rates come back down and affordability improves and more people, continue to come from the GTA towards Brantford. So on the other side of things, if you're a seller thinking about just cashing out, maybe retiring, maybe it's not the right time. Maybe you do want to hang on for a little bit longer and watch those prices rise. So this is an interesting conversation. It's totally okay to reach out to me for kind of an estate planning or a retirement planning conversation. It's not going to be pushy to tell you to sell now. If the best solution is to wait a year or two, I'm going to give you that advice. Now, investors, we haven't talked about you a lot, but I'm sure a lot of you are watching this video. One of the other projections in the CMHC report was that rents are going to continue to rapidly rise. So this could be a great time to get into a rental property, making sure you have the ability to raise the rents or get tomorrow's market rents. The rental market we are still seeing is to be very competitive for tenants. So you can have your choice of really high quality tenants at good market rents. And we also know that rental properties, especially multifamily rentals, are valued based on their multiple of their net income. So as rents continue to increase, the value of those multifamily properties continues to increase. So it could be a solid time to hop back into the market if you've been waiting on the sidelines. And we do see very successful flip opportunities going on right now. Anytime the market's heating up, the pretty sexy homes are selling for premiums, while the ugly duckling homes that need the work are usually selling for discounts. And so that window is opened back up where you can grab a home that needs a little love, fix it up and sell it for a premium and make a good profit. So all these opportunities are available out there. Thank you for watching and making it all the way to the end of this video. I really hope you found it useful. Don't forget to hit that subscribe button if you like videos like this so you get my new reports every single month and also all the other great videos I'm making. Thanks again for being here. All my contact information is in the video description below, and make sure to check out this video next.